We're 2.5 hours into trading. It is Wednesday morning, June 9th. Hello, traders. Let's take a look at yesterday's pick. Let's take a look at the market, see what it's doing. I'm going to put up the daily chart for the S&P 500. We'll run that in the background. And then the primary chart will be IBM. I always have a chart of the market in the background. More on that later. So you can see how IBM is moving higher and the market is actually down a little bit today. Very, very strong pick. Nice stock. I love this horizontal breakout. I believe the stock continues to go higher. You can see some volume coming in right now, which volume is critical. Volume is super critical to every trade right now because you do not have a market tailwind. You will not have help from the market. So the stock is going to have to do all the heavy lifting. So you can see also that we've got a downward sloping trend line here that was breached to the upside along with that breakout. I love it. In fact, I think yesterday I'd mentioned selling an out of the money bullish put spread. That is still the preferred method for trading swing trades right now. Take advantage of accelerated time premium decay. Distance yourself from the action. If the market hits a little bit of a speed bump, the stock can pull back and it's got multiple support. It's got that breakout to lean on. It's got the upward sloping trend line to also lean on. Those are just additional check boxes that increase our probability for success. So IBM looks very good. Let's take a look at the overall market. As I stated in my pre-open market comments today, the market is not going to do much of anything. You can see tiny little bodied candles in here, trying to get through this resistance level, not quite able to punch through. We're in a news vacuum, folks. There's nothing going on. Economic releases, those were all last week. We had earnings season come to a close. That's behind us. There's nothing to drive the market here. Fed is on the sideline, so we are just going to float higher on extremely light volume. When we have these types of conditions, any gains that you have on light volume can be stripped away in an instant. This is a very important message that I'm going to give you right now. When you have light volume, the market is going to latch on to anything that it can just to see if it can get some traction one way or the other. There's a piece of information coming out tomorrow. So you need to look ahead to see what are these little puzzle pieces that might possibly be a speed bump or a fly in the ointment. CPI is coming out tomorrow morning. Everybody's been super worried about inflation. Last month, CPI came out at 0.8%. That is a very, very hot number, much hotter than the Fed had expected. Again, they're looking for transitory inflation. We have the CPI number coming out tomorrow morning. If it's anywhere around 0.7, 0.8%, I think you're going to see a market pullback. If it comes in at 0.4%, then I think you might actually see a little bit of a market breakout. But overnight, why take any chances? The market hasn't gone anywhere. It's not telling me that it's going to go anywhere. So I would say right now, surprise favors the downside because good news is priced in. Overnight, we did learn that China's producer price index jumped 9% in May year over year. That is a big price increase. So be careful. This is not a great swing trading environment. This is a low probability trading environment. What you want to do is you want to wait for these dips. And in this particular case, down to the 50-day moving average, that will be your best strategy. No, you don't want to sell out of the money calls. No, you don't want to be buying puts. Just be patient and wait for the dip. Have your stocks ready to buy because the dips do not last long. Get a dip to the 50-day moving average, put on some bullish put spreads, knowing that that horizontal support right here should be able to hold. So lots of liquidity, Fed on the sidelines, excellent economic growth, got all those numbers last week. So I'm not looking for a big market decline, just a little bit of a dip because bullish speculation has been very high. Bullish speculators will get flushed out and that'll give us a little drop like that. That's all we need. So if you're a swing trader, keep it light today. reduce your overnights, watch that CPI number, and then act accordingly after the number. If we get that pullback, be ready with your bullish put spreads. I am going to spend just a few minutes on the 10P indicator. First of all, you have to put everything into context, and I spend so much time every day on the market. I probably bore most of you, but this is the most overlooked aspect of trading by novices. They are oblivious to what's going on in the overall market. They find a stock, they get tunnel vision, and then that's all they focus on, and they're unaware that market conditions are changing. 75% of all stocks follow the market, so you must get that piece of the puzzle right, and context is critically important. Well, what's the context right now? Well, we're in a 12-year bull market rally, okay? We're in a 12 plus month bull market rally. All right, trend clearly higher. But right now, we've got these tiny little bodied candles, which tell me that the market's not going to go anywhere. Buyers and sellers are paired off. Every day, we could expect the opening range to be established probably within the first 90 minutes of trading, and then we're going to stay in it. And it's going to be choppy back and forth. That means that you need to trim your size and your trade count when you're day trading, and you need to be patient. Context, critically important. So how do we know when to get in trades and when to get out of trades? Well, we use the 10P indicator. And when you get a big drop in the 10P indicator, that tells you that on a cross where you have the red line above the blue line, that you should be looking for a market bounce. And you can see that came into play right back in here. So when I see the cross, Pete, I buy. No, you do not buy. You need technical confirmation in the S&P 500. Okay, well, what does that look like? Draw your downward sloping trend line. Aha, now we've got a breakout to the upside. This means I've got the bullish cross right here, and I've got a little bit of a breakout in the market. There's your downward sloping trend line. There's your breakout bar. Okay, I can favor the long side. Everything's going along well. And then right in here, we get a bearish cross. Does that mean I short right now, Pete? Right now? Is this when I want to short? Yeah. No, you need technical confirmation. Upward sloping trend line, breach to the downside. Now you should be taking profits in your long positions. And right now, for most of you, I would suggest if you're day trading, only day trade from the long side. You don't need to day trade from the short side. Very difficult to make money on the short side. Really only for very seasoned traders who know how to read intraday candlestick patterns and know how to identify these shorting opportunities. So for most of you though, the best thing to do is, okay, I'm going to be taking profits on my longs because I'm getting a spike in the 10P indicator. I know the market's just going to chop around. Here we've got an upward sloping trend line right here, breach to the downside. Now I should wait for the market to come in. As the market is declining, I should be running searches like relative strength 30. Well, what does relative strength 30 do? Let's go into the daily searches, relative strength 30. These stocks have been strong during the last 30 minutes. Market down, 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 down. I want to find a stock that is up, up, up. That tells me that the buyers are lined up, 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 up. Look at this volume. NVAX. We are 2 hours and 15 minutes into trading. Excuse me, we are 2 hours and 45 minutes into the trading day. Watch NVAX. Watch it. This thing's going to go from here. I could tell you. It's bubbling up right now. That's what you want to be watching for. Well, do I need to buy it right here, right now? Is this it? Is this it? Well, we're coming close to a 10P cross right here. So it's telling you that, yes, pretty soon, and you want to wait for that cross, yes, you should be looking for a buying opportunity. We also have the low of the day here. We've got a bullish hammer. So we had a candle where they tried to take out the low of the day, and everything rallied right back. So we were able to preserve that low. Yes, we could get a little bit of a release to the upside. I would still wait for that cross. NVAX would be a stock that I'd want to be in because as soon as the market finds support, zoom, gone. What else might I want to know on NVAX? I would want to know if I like it on a swing basis. Every day trade should start with a good looking swing trade. If I have that in place, I increase my staying power. NVAX above the 100-day moving average. Aha! Also looks pretty dang good. So yes, NVAX would be the type of stock that I'd want to take a look at. SNOW above the 100-day moving average. Cool. Tiny little candles in here, so not a lot of momentum after earnings announcement. So everything looks pretty good on it. Let's see what it's doing on a 5-minute basis. Now here's one that I probably would be more cautious on. Why? Rally, down, rally, down, rally, down, rally, down. Choppy back and forth action. I do not want to be in this stock. I don't know what it's going to do minute to minute. Does it look good right here? Yeah, sure it does. Context, context, context. Look at what the stock has been doing. You have to put the current move into context. Chippy choppy all over the place, couple nice bars. Okay, big volume. I had mentioned to you earlier, we like big volume breakouts. So what do I do with this particular stock? CRWD. Do I trade it here? Do I buy it? I don't have the market behind me, and the stock's got a couple of nice bars. I do like the follow through. Usually on moves like this, you'll see one big volume bar and then nothing afterwards. Those moves are usually one and done and they fail and they go right back. This one could actually be pretty good. So I'm going to be keeping an eye on it and I want to watch it. But what I would do is I would click the alert line and I'm going to drop an alert right here. If it gets above that, I'm going to know about it. And I could drop another alert line right here, a little bit higher, just to give me another look at it. If it can get through those levels and the volume continues, I'll consider it. No, I don't want to buy this because this stock is weak today. So there's no reason for me to trade this. This is a weak stock. If anything, this is probably going to be a good short. It just so happens to have relative strength very temporarily because it's bouncing. Other than that, this is a good looking short. You can see that breakout below horizontal support right there. That was a gap higher, and that opening has been breached, and now we have what's called a failed breakout. UPS is a nice looking short here. Well, so how do I trade that? I'd like to find a good short or two. Well, what I would do is I would click on alert and I would click on the bottom of that candle right there and whoops, picked the wrong candle. Bottom of this candle here, and I would draw my alert line. If it's able to come back down, if I had a little bit more of a consistent bounce, I'd be able to draw an upward sloping alert line, but I don't have that right now because it would come into play pretty much right here. So yeah, I think UPS is going to be a good short. LLY, I identified this long early in the day. I love LLY. I think this stock goes higher on a swing basis. All of those big gains were preserved yesterday. You can see how it closed near that closing price from Monday, and today it's continuing to advance. I love that breakout, and look at that volume. Yeah, I think LLY is going to continue to move higher. So 5-minute chart, remember, it has relative strength. Market down, 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 stock inching higher, 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 approaching the high of the day. When I get this bullish cross, which is starting to form a little bit, I want technical confirmation in the market. So let's set this trade up right now. It's happening right now. So let's go through it. Here's how it works. Okay, click on alert, click on that high candle right here. Let's click on that candle right there. Whoops, drew that line too steep. We're already through that. I need to have a little bit of a slope to the line, so I'm just going to pick any 2 points that will give me a slope. There's a downward sloping trend line that'll continue to follow the S&P 500 downward. So even if I have a bullish cross in here, I don't want to be buying the S&P 500 until I have technical confirmation. If this downward sloping trend line is violated to the upside, and I've got a couple of nice bars, perhaps a bullish engulfing candle, a bullish hammer off of the low of the day, then I would consider this to be a valid buy signal. Okay, do I go out and buy the futures? You could. I only do that when I've got really nice intraday price movement on the market in this chippy choppy market. No, I don't want to trade futures. There's a huge edge to trading individual stocks. You mean like this one that's already telling me it wants to go higher? Exactly. That's what we do. We wait for the market to come in. We wait for the bullish 10P cross. We wait for technical confirmation on the S&P 500. When we get this piece of the puzzle going, we've already been searching for those stocks with relative strength and heavy volume. We know exactly where to go. So you would buy LLY or you would buy LLY in the money weekly calls. Market starts to regain its footing, market starts to move higher, LLY lifts off. Okay, well, big deal. Why is that any better than buying the S&P futures? The reason is because let's say that we get into this trade and for whatever reason the market decides it's going to make another leg lower. Whoosh. It's going to take out these stops. You know there are sell stops here because this is multiple horizontal support. Everybody buying, 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 buy on that support, buy. Well, when that level breaks, all of these sell stops get triggered. And so you could have, whoosh, big red candle. If you just traded futures thinking that we were going to get that bounce right here, you would lose money and big money. But if you were in a stock like Lilly that wants to go higher, whoosh, Lilly sits right here. You can scratch the trade, no harm, no foul. If you're right in your market analysis and the market takes off, Lily, goodbye. Sometimes all the market has to do is just flatline in here and you'll see, woof, big green candle on big volume. It's what we do every day. This is the edge that we trade. This is the edge that we trade, and that's exactly how we trade it. It works. So for any of you who are watching this video, if you've been trading for a while and you've had marginal success, you're the ideal candidate for Option Stalker. If you come in, you'll be able to learn the system very quickly. It will lend structure to what you're doing, and you'll watch other traders who are posting trades. They've learned the system. It's not just me making money, it's everybody making money. In fact, my role in terms of posting trades in the chat room is fairly minimal. I'm mainly posting market commentary. And yes, I try and give everyone 2 or 3 really good stocks to take a look at each day. So Lilly looks fantastic. So let's go on to today's pick, and I'm going to continue to just go down through this list right now. We'll take a look and see if there's anything else that's setting up well. Don't like that. Snap getting a little pop right here, but I'm not real crazy about the daily chart there. 200-day moving average, PINS, with some room to move higher up to the 100-day. That looks okay. I'm going to go into one of my favorite searches. You see me talk about pop, bull every day. Could go through all these, but I'm going to start to cut to the quick because my video is getting a little bit long right now. Macy's, letter M, nice upward sloping trend line, well above the 100-day moving average, excellent volume coming in, breaking out through horizontal resistance. Let's take a look at the 5-minute chart. Very, very nice. You can see stock ran up, consecutive long green candles closing on their high, massive volume. Baby, we got all the ingredients. This is the one you want to be day trading. Letter M, Macy's, that is your pick of the day. If you're not a day trader and you are looking for a swing trade, we've already seen that daily chart. We like it. How might you approach this trade? Well, we know that we want to be favoring out of the money bullish put spreads, bring up the option chain. I'm going to go out to the July expiration and I'm going to be trying to key off of this 100-day moving average right here. That is major technical support, but it is not the only support. First of all, we've got half of this long green candle. That would be first support. Second support would be this 1875 horizontal resistance right in here. That is now a support level. Third support would be this $18 level. Okay, so we've got multiple support levels that the stock would have to move through. Why is that important? Because we know there will be buyers here, we know there will be buyers here, we know there will be buyers here, and our fail-safe is this major technical support at the 100-day moving average. All right, so let's go out into July and let's look at the 17-16 bullish put spread. You can see it's currently 15 cents bid, offered at 19 cents. I like to get 20 cents for these spreads when I have $1 between the strike prices because I have to put up 80 cents for that. $1 between the strike price minus 20 cents credit received equals 80 cents. That's my margin requirement. That's my maximum risk. 20 cents divided by 80 cents equals 25%. I will make a 25% return on my margin if this spread expires worthless in a month. Pretty boring trade. It should be boring. We want it to be boring. We want to take advantage of accelerated time premium decay. And look, I'm expecting the stock to grind higher. Just in case the market runs into trouble, multiple support levels along with this and time decay working in my favor in a major moving average. Folks, 25% return in a month. That's a great return. That's how you can swing trade this market. Again, I still prefer to wait for those big market dips before I put on a lot of bullish put spreads. This one looks like it would be good right here and right now, but I would passively be putting bullish put spreads on right now on those market dips that might only last a day or two or three. That's when you'd want to be nailing these trades and putting on whatever your risk tolerance is, maybe 4 or 5 or 6 of these bullish put spreads, because it's going to be like watching the paint dry this summer. Nothing to drive the market for about another month until we start getting into Q2 earnings toward the end of July. There's going to be a whole lot of nothing going on. And SPY breached above the trend line. That was the alert line that I drew. See this little alert right in here? Let's go back into the 5-minute chart, and then let's see how things are setting up. Okay, multiple support, tails under body, bullish cross, 10P, above the downward sloping trend line. Now I can feel pretty confident in taking a bullish day trade. NVAX was one that we were watching. That's what I would do. Big volume is the key. That's all I've got for you today. I hope you find the lessons in this video educational. Please post your comments and questions below. They keep me going. They keep me motivated. I promise I'll reply. Trade well. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.